Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Tuesday, September 11th, 2012. Tomorrow is the 11th anniversary of 9/11, and I just want to express my prayers to all the victims and their families and all the rescue teams involved. For them, it's not just an anniversary. They live every day for the last 11 years with this tragedy. So my prayers go out to them. I was doing a little research over the weekend, and I wanted to do a comparison of the Aussie yen compared to the S&P here on the left. The Aussie yen is in this chart, and one of the most outstanding things were this is a universal cursor for the computer, except for this little chart in here. But in this area, it's on July 11th on the left-hand chart, and also, July 2011 and July here. There are everything is moving in sync in these huge round. These are both daily charts on the Aussie yen and the S&P. So all these movements are in almost direct synchronization. Sometimes there's a 2 or 3 week heads up with what's going on with the Aussie yen. It's a heads up because when risk off becomes the MO of the day, modus operandi of the day, and that's how all the funds are trading, then it soon follows the S&Ps and the Dow go down. So what I noticed was that the peak that's happening here in the Aussie yen on March 19th, 2012 is correlated with this peak on the left-hand chart on the S&P of March 19th, 2012. And it came down, the S&Ps came down, hit the 377 moving average, and then made a newer high. Okay, so let's take a look and see what happened on the Aussie yen cross. Remember, this is a risk on, risk off trade. It came down to those risk off. When it came back up on this same chart that we're looking at on the right hand side here, it became a 50% retracement of this move down, whereas the S&P came down and retraced 100% plus some. The point being that what I've seen of this chart and the studies that the back studies that I've been able to correlate between the S&P and the Aussie yen is that the Aussie yen is a leading indicator. So if this is only a 50% retracement, and it looks like we can spread this out a little bit here. It's been dribbling down all the way as the S&P goes sideways or up. Remember, the S&P went sideways about 10 or 15 days, and this was going down. The Mario Draghi announcement of buying up all the bonds, as long as everybody paid attention to austerity programs, shot the S&Ps up 27 points up on the left-hand chart, and it also shot it up on the Aussie yen. So for one day, it was risk back on. But even this risk back on is less than a 50% retracement before it started heading back down again. So if this indeed is a lead indicator, the Dow is a higher high and the Aussie yen is a 50% retracement. If this is a lead indicator, then what's going to happen in the next 4 to 6 weeks is that the S&P is going to have to catch up to what risk off is doing. And as this continues to come down, let me get rid of this here. As this continues, as the Aussie yen continues to come down, then this is going to be a rather violent reaction here, because everybody's going to realize that they're not getting the Bernanke boost that they've been waiting for. And Bernanke has to do absolutely everything right on Thursday. He has to satisfy everyone in order for this to continue up, because it's still. Let me just. I was just checking the volume today. It's 616 million. So it really wasn't a lot. So the S&P is going to have to play catch up for the risk-off trade that's going on with the Aussie yen, which means that in a very, very short period of time, we could see 1,400 on the S&P. And I have a feeling, not substantiated yet by the waves, but I have a feeling that this could actually come down very quickly to this trend line that's parallel to the inside trend line that goes back to October 2000. Let me see, October 2011. So that would take us down, if it happens this way. Now, I think because of the Draghi and ECB announcement last Thursday, that may have been the top in place, because it's awfully close to this upper trend line that does go back more than a year. And so we could see not only a 1,400, but it could do twice that and come all the way down to the support line, to this trend line right here. And I believe this is the 89 period moving average. We could actually see 1374, and it would be a blink in the eye before it bounced back up to, and now this would become, now 1,400 would become resistance. So just be careful of that. Now on the 21-minute period average, we started rolling over really big time about 11 o'clock today. It's kind of like right after, about a half an hour after, this is 11 o'clock Central Time. So the European market had been closed for a half an hour, and it just rolled over very, very hard. Now, whoops. I'll bring down a chart of what happened with the, you can see it right at about 11 o'clock. Let me see. It actually didn't happen until when these lows were taken out on the vol spread. The advanced managed to decline right around 136, and then it never looked back. It came back, it came down, came back up and kissed the line, and then dropped all the way down. So we're down 10 handles, 11 handles. We're down 2 handles right now in the aftermarket. I'm looking at the tick chart of the S&P, the 1597 tick chart, and you can see where it came down here, but there's probably more activity than normal. It actually looks better on the 21-minute. So that's a really, really nice, easy entry right there. And now all of T1 is below zero. By the opening of trade tomorrow, T2 will start going below zero. And if these roll over one wave after another, we're going to see 1409 before the end of the day, which is like 17 handles from here. So basically, my point is, if you have been long this market and we're hoping for something on the upside, even greater, it may be wishful thinking. I think the top is in, and everything's starting to look like it's rolling over, and the Aussie yen is confirming a non-confirmation top on the S&P. All right, let's take a look at a few stocks. Actually, I did before I go to some stocks. I actually wanted to mention that in one of the rare occasions where I'm listening to CNBC and there's something valuable that they say that I can use, apparently at 3 p.m. Eastern Time, so that was 2 p.m. Central, equities took a massive drop right in here, and this is correlated with the time frame, right in here, Equities took a massive drop, as well as interest rates, because there was a report out that the July consumer credit that was expected to be positive $10 billion was negative 3.27 billion. And it's the first negative number in almost 1 year. So that's the reason for this drop. So to say that Bernanke is going to come in and save this it's really shooting in the breeze. Or a different expression that I'm not going to say. Okay, let's go through a few of these stocks quickly. Goldman Sachs. I suggested that if it hit that I liked it on the long side because the wave was going above zero, but because there was such overhead, consistent resistance at the 377, that anything at 216, 116, you should take half off the table. Well, now I think you should take it all off the table, because the 21 is already rolling over, and what's happened in the past, when it hits resistance like this, it kind of creates like a little head and shoulders. So this may be the head. The shoulder's going to be around 105, which is a 10-point drop from here. All right, looking at Amazon. Amazon took a little bit off the top. I wouldn't chase it here. It still looks all right, actually. Even on the 21, T5 is nicely above the main dark blue wave is still above zero. And even though the smaller wave is below zero on T1, it could easily pop back up again. So Amazon, so let it come down to 250, 246 if you're interested in the upside. But I wouldn't play this positively or negatively, puts or calls, or short or long right now. All right, looking at Baidu. I still like Baidu to the downside. It came up. It was up actually most of the day until the last. It was way down. It was down like 2.5, 3 points at the beginning of the day. Made its way back up to like halfway up this a little bit up this candle here. So basically, let me see here. It did a nice 50% retracement from the high on Friday, and then started rolling over again. T5 is down on the 21. T4 is halfway. T2 is below. T1 is below. I continue to see Baidu moving down, and there is no reason why this should not hit 100 really soon. My target on that is actually a 1272 extension, but the first target is 100 before any kind of real bounce. So if it hits 100 and you're short, take it. Okay, looking at Netflix, I liked Netflix on the upside, but I wasn't going to touch it because it's too volatile and it does its own thing independently. I like the fact that even though T1 on the 21 minute has gone above zero, that T5 never went above zero, and also T1 on the daily actually went below zero on Friday. So that is definitely a seller. I still like that to the downside. Target on that is, I don't know if I have a target on this. I think my target is 43.80. And that's a 1272 extension. And this is about to go below zero on the 21 minute. On T1, and T1 on the daily has gone below zero for the last 2 trading days, while T5 is below zero. Netflix is a definite sell. Okay, one of my favorite stocks, Apple. It's down 17 points today, but not before it hit an all-time high of 683, 683.29. So it was a 21 point turnaround from the high. Now you can see that on the 21-minute chart here. But if you just use the 21-minute as a more conservative long time frame, then you wait till it crosses, then you wait till it bounces back up to the 8-period EMA, exponential moving average. But if we look at the 1597 chart, the entries are more accurate. So this is where the day started right here at 8:30. Whoops, at 8, and it had a pop, and then if you look at the wave that hasn't been going up and down, you have to move down to T3 right here. This is 1, 2, 3, 4, 5. So T3 goes up on September 4th at 8 o'clock in the morning, 8:53 in the morning, and it goes down at 9:24. So this would have been a very, very nice entry on T3 right at this point right here, which correlates to 676 on Apple, and there was no reason to get out of it. It's just one wave rolled into the other, rolled into the other. So that would have been a very nice play. All right, looking at MasterCard, I know I've said for the last 2 weeks I've been waiting for MasterCard to cross over to the downside on this little tiny blip here of this portion of T. It probably wasn't the smartest move in the world, because even though the small wave went down, the large wave was still way above zero. So I was playing more of a hunch than anything else. I've been getting burned on it. I still have it. But as luck would have it, the wave on the 21-minute has started to roll over, and the cross between the 8-period moving average and the 21-period moving average has also started to cross over. So that actually might turn out to be a good play. As far as GLD goes, I would not chase this. I would wait until it came down a little bit. If the market's going to come down, then all asset classes are going to come down, including gold, including GLD. So if you like, you can put in an entry at 165.07, but I kind of like to think that it might go down to 162, because if you look over at the 21-minute cash price on it, the 377 on the 21-minute is right when, by the time it comes down here, it'll be about 162. So I would not, if you like, and it looks like all these are all the waves on the daily are heading up. The main waves, number 4 and number 5, T4 and number 5 are still up. And even if it comes down here, these are still going to be above zero. So a good entrance would be right in this area right here, which is also they're going to be the resistance that existed before it broke through at 162.5. So if this comes down to here, that would be a absolutely perfect entrance, and that also correlates with the 21-period moving average on the daily. All right, Google shot up between over a 3-year trend line here, and its first act should be to come down and kiss that trend line before it takes off again, or kiss the trend line and keep on moving down. So as far as Google goes, we have to watch the 21-minute period moving average. Right now it's moving down on T1 and T2, and we'll have to wait and see whether there's a follow-through with 3, 4, and 5. If so, then Google will probably come down to 678 before it makes any move, which is also, again, this correlates between all the resistance moves that were going on from all of August and part of September. It came back. It resisted before it moved here. It resisted here. You can see it on the daily chart on the left. Poked through, came back again, and bounced right off that exact line, and then started moving higher. So this would be a good test if you like it on the downside. I'm sorry, if you like it on the upside, then wait till it hits 680, but do not chase it here. It's way too extended. That's all I have for this evening. I'll see you at the next update, and it should be actually a pretty exciting week. There's a lot of news coming out, a lot of activity. It should spike up some of the volume, and you might get lucky and see a 20 handle day. I will talk to you at the next update. Good luck trading.